Gershon Bassey, Cross River South. The Senate notes that in 2001, the federal government of Nigeria provided a fiscal incentive package to Adax Petroleum Company that saw the reduction of the company's petroleum profit tax from 85% in 1998 production sharing contract to 60% in the 2001 fiscal incentive package. And the company's share of oil lifting increased from about 45% to 56%. The Senate further notes that Adax Petroleum followed through by investing to grow production from 10,000 barrels per day in 2000 to over 100,000 barrels per day in 2008. Aware that Sinopec purchased the Adax Petroleum Nigeria production sharing contract in 2009. Further aware that from the purchase by Sinopec in 2009, the assets have witnessed significant production decline due to poor investment decision-making, production levels to fall presently to approximately 30,000 barrels per day with no developed gas. The Senate observes that Sinopec Adax, despite holding a 100% production sharing contract with oil mining leases OML 123, OML 124, OML 126, has refused to stick to its end of the bargain to continue investing in the operated assets, leading to a revenue loss of about $3.35 billion per year to the Nigerian government. The Senate further observes that OML 137 is non-producing because Sinopec Adax has breached the fiscal incentive package by neglecting to invest in that asset, resulting in huge oil revenue losses to Nigeria. The Senate is concerned that in the fourth quarter of 2018, the lack of competent operations by Sinopec Adax made 5 Nigerian general managers and their deputies exit the company voluntarily. Further concerned that given the lack of any demonstration by Sinopec Adax to stay in Nigeria because of the company's unwillingness to purchase an office building and its refusal to invest for production growth, it is shocking that NNPC continues to honor the elapsed gentleman's agreement that made Sinopec Adax operate these assets and lift 70% of crude oil they are producing, resulting in a huge annual revenue loss to the Nigerian government. The Senate is worried that in 2016, the process of value for money audit of $1.37 billion of cost oil that had been lifted by Adax Petroleum from 2007 to 2014 was initiated with the understanding that it would take 3 months to conclude. The Senate is further worried that since the initiation of the VFM, the value for money audit, in 2016, Sinopec Adax Petroleum has continued to enjoy oil overlift and have frustrated the process of conclusion of the audit to allow for equitable and accurate determination of lifting. Disturbed that the COVID-19 pandemic has negatively impacted on our economy and has thrown Nigeria into debt, meanwhile the federal government has over 1.2 trillion naira of its revenue lying with Sinopec Adax Petroleum Company. The Senate is also further disturbed that Sinopec Adax will be leaving an abandonment and decommissioning liability cost of around $750 million at the expiration of their stay in Nigeria come 2022. Accordingly, the Senate mandates the Senate Committee on Public Accounts, Petroleum Upstream, Senate Committee on Gas, and the Senate Committee on Finance to scrutinize the 2001 fiscal incentive package and other federal government agreements with Sinopec Adax Petroleum Company with a view to ascertaining the level of the company's compliance with these arrangements and make recommendations to the Senate. I so move.